The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the August 20th, the Thirsty Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much, much more important than that. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, I've got you covered there too. Go ahead and send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. A bit of a mixed bag out here. The Dow is up 3 points. The S&P is flat, up 77 cents. The Nasdaq 100 is the big winner. It's up 78 points. The Russell's off 7. Semi's down 21. Transport's up 14. Gold is trading out at 1948. The spot volatility still below its 50-day exponential moving average, trading out at 23.23. The big mover, dollar-wise, the upside today is Tesla, up $110, nearly 6%. Shopify, 2% or $20. Amazon 19 or about 0.5%. Zoom is up 15. That's about 6%. Chipotle's up 14 or 1%. To the downside, Regeneron Pharmaceuticals off $16, 2.5%. Estee Lauder down 7%. Nordson Corp off $14. Lam Research 14. Sarepta Therapeutics trade out at 140. Remember when that was 8 all those years ago? Sarepta Therapeutics is off about 5 or 6%. So let's begin here. We've got about 3 questions that have come in. We'll certainly get to those. Let's just do a quick overview of what to be focused on, paying attention to in the market. It's going to be pretty easy. We can boil it down to really just a few numbers. Those few numbers, 3342, brand new market profile formed last night at about between 4 and 4:15 or so, and it has taken hold. And so that's the cool thing. Well, the really cool thing about it is it's a narrow box. So really, and when you're talking 3342 to 3388. Now it's kind of hard to believe that I just said it's a narrow box. It's 46 points. In days past, that would have been a lot. But the average true range, what is the average true range of the ES Mini over the last 10 days? Anybody know? I mean, it's been pretty mild, but just for the heck of it, we can find out. Just to give you an idea out here. Come on, give me that edit button. There we go. We should be able to see what the last 10-day ATR for the ES Mini is. It's 38 points. 38.6. So we're only talking about, we're talking just a little over 1 day. So we're talking about a 1.27 move from top to bottom, give or take, with regard to the size of that profile. Now, the cool thing about the profiles, folks, is that if we do see 2 closes below the bottom of a box, it's an indication that we have a change in trend. Now, change in trend to where, right? Because we're always trying to identify support and resistance out here. But right now, let's just simply focus on what we need to focus on, and that is that the ES Mini is trading with inside a profile, the bottom which is 3342, the top is 3388. You close above 3388, it's a big breakout move. If you close below 3342, 2 sessions in a row, 2 consecutive sessions, that's an indication of a change in trend out there, which is really a beautiful thing. Because if we do get that change in trend, odds favor. We've got quite a pullback going into at least for a couple of months out here. So there's no reason to really have to be the hero right now and jump on that train and try to sell that top tick. If you were going to try to sell that top tick, it should be at 33.88 inside the ES Mini. If we take a look at the NQ is trading above its TAS market profile still. So that is bullish, even though we did get a bearish reversal signal yesterday. If that high gets taken out, that means nothing. At this stage here, it means really not too much to me. And if we take a look at the other level to be watching, we looked at this for the past few days. It is the bottom of that Russell 2000s market profile, and that is at the 1560 level out there. So those are going to really be the numbers that you would key in on to be able to make a determination as to what the market is communicating to you and I. During the 1 p.m. update, I showed this. Apparently the charts weren't posted for some reason. So if we take a look at Apple. So Apple, if we believe that there's one stock that is going to help us to identify that top out here, well, the number to be watching is 468.65. We're trading at 468.95 right now. Why 468.65? That is yesterday's high. I'll pull over my other white background chart. It's a little bit easier for folks to see out here. We can see that yesterday price was moving higher, did it with a bearish reversal candle by day's end, the shooting star candle out there. And so what I gave you, that 468 level, was yesterday's high. Price closes above that. It closes above resistance and set to continue to move higher. Now, you might ask me the question, move higher to where? That's a great question, and we'll go figure that out for you since you asked. Isn't it amazing? I can have this conversation with myself and then think that it's you that's having that conversation with me. So again, the key number out here, 468.65, because if Apple closes above that, there is no topping pattern that is in place as we speak right now. So where is it that Apple could head to? Well, when you're up above all kinds of resistance, the tool, one of the tools, oops, that's not the tool, this tool here, we go take a look at our horizontal trading ranges. So this is the horizontal trading ranges for Apple. By the way, these horizontal trading ranges, the data that we're using takes us back into 1997. I remember it well. I actually do remember it well because it was during well, forget about it. Let's not go there. But in any event, going all the way back there, our horizontal trading range, the large one, is really between $2.34, where there were 172 either opens or closes, and 28.60, where there were 15 opens or closes in that range. And that set up the monthly horizontal trading range. Now, if I go ahead and I strip out that historical data, and let's say I start here in 2009 as an example, which I could do, we would end up with different horizontal trading ranges. But I'm using as much data as I have out here. These seem to work pretty well at being able to identify support and resistance levels. So where's the next resistance level on the monthly time frame? It's up at 475.02. That doesn't mean that's where it would top. It's just the next level is 475.02. The weekly, the next level is 474.85. Now here on the weekly, coming off of the bottom in 2019, I've drawn in here an A to B equals CD pattern. Now, let me open this up here. Let me share with you a few things about A to B equals CD patterns. Number one, and perhaps the most important thing that you could do in drawing these patterns out here is make sure that the angle of the dangle, the angle of the A to B leg out there matches the exact angle of this C to D leg. Why is that important? And what is the message right now about this move versus the move off the 2018 bottom, 2018 low, to the high that it made in 2020? Steve Rhodes with TFNN. We'll be right back, and I'll explain that to you as soon as we return.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we were taking a look at this Apple chart here before we went to that break. This is a weekly time frame. And if you take a look at coming off of the March low, so they're between the 2018 low out here inside of Apple at 142 bucks. That ran up to 327 back in January of 2020. Then there was a 61.8% retracement. The exact retracement was 62.01, but from a rounding standpoint, 61.8. So a perfect Fibonacci retracement. But now what you can see is price is much stronger along the C to D leg than it was along the A to B leg. Now, how do we know that? That is strong. We know that it's stronger because of, look at where the bars are inside the angle of that C to D leg. So that was already communicating that on a weekly basis, Apple was going to do more than a 1-to-1 A to B equals CD, which it has done. It's now beyond the 1-to-1.272. And so if Larry Pesavento were sitting by my side and he were going to give you a price projection for Apple, and knowing that price is over the 1-to-1.272 A to B equals CD, he'd tell you Apple's headed to 513.32. Now, I don't know that he would tell you that, but in the A to B equals CD and the Fibonacci summation index, an expansion mode, that's what it is communicating to you and I. Nonetheless, we're still going to, and that's coming off of the weekly time frame chart, we're still going to watch today's close, because if Apple closes below, again, that number is 468.65, then the topping pattern, the Rhodes Momentum Indicator topping pattern, will still be in play out there. And if it closes above it, then it is not in play with regard to the Apple E1. Okay, let's go to a few of our questions, then we can come back to the general markets. First one coming in from DG, and DG wants to take a look at GRWG. So let's go take a look at it. That says Grow Generation Corp. No idea what they do, but what we do know is in the past 5 sessions, this has gone up over 100% out here. Back on August 13th, the low was 963. This made it up to a high yesterday of 2288. So it's way more than a 100% return out there. And Dennis's question is, what are your thoughts on GRWG for the rest of the year? Hey, if I was in this at $9, I'd be happy to sell it right now for the rest of the year. Dennis, the problem with an instrument like this, I don't know what they do. I know there's been liquidity has been compared to the last 5 or 6 days. It looks like a pump and dump kind of a thing scenario out here. If you're looking to get in on GRW, first of all, there's not enough data really for me to give you an idea of what does this look like for the rest of the year. What we can say is this, and I don't know if it was this specific instrument, if this was a reverse merger, I really don't know. I'm guessing it was a reverse merger. It was a shell, and they did because this on the trading month of January 2018 went from a low from $3 to $20 out there. So and you can see that prices gotten up to that level. It's rejected it, but I don't really know that you can rely on that data, and I wouldn't rely on that data. Even though I just shared that data with you, I wouldn't rely on it. If you're not in this stock, don't chase it. Don't chase it. Well, go ahead and do what you'd like to do out there. But I just can't. There's just no human possible way for me to be able to provide you with just not enough data for me to provide you with any really good outlook. If you ask me where support is at, that's a much easier question. That's going to be 1494 on a pullback. That's Stevie's green line on the daily time frame out there. If I look at the weekly time frame, try to get a gauge for where price might pull back to. If it were to pull back 1016 out there, do I have any kind of a topping signals? I do have a wave number 7, letter G on my screen out here. But this, I don't know what's going on with this equity. Not like I know what's going on with other equities out here, but this has just been a 100% move. If you were in it, Dennis, man, I would take my cash and be real happy. A hydroponics company. Thanks, Bo. Still would be the same. There's actually, unless there was a buyout, I don't know what's going on. Why would a hydroponics company jump over 100% in 5 days' time? What do they cure? They cured how to grow pot really quick. Great earnings report. Yeah, okay. All right, great earnings report. Take it up over 100% like that. A lot of companies have great earnings reports. So in any event, when I take a look at the way that this thing is traded out here, I don't buy it. Even if it's a great earnings report out there. It looks more pumpy and dumpy to Steve-O-san, but it really doesn't matter. There's just not enough data for me to provide Dennis with enough information. Sorry about that. John writes in and he says, Steve-O, gold, GDX, the junior nugget, going up or down? Probably a little bit of both, John, but I don't know what your time frame is. But let's go take a look at it for you and try to answer it for those multiple time frames. So as we take a look at Goldilocks, trading out right now at 1945. Make sure everybody is on the December contract. What do we know? Well, we know a couple of things. One, let me come back here. Apologize. Let's start one at a time. The couple of things. First thing is we know that gold is trading below the bottom of its daily profile, John, and that is never good. And when you have two closes below the bottom of a profile after you've had a topping signal, then it's really not any good out there. So here we're taking a look at the December contract. That is panel number 2 from the right. And so we've got two closes, 2 days right now. What is this? Yeah, today would be the second day. That's telling us of a change in trend. So that's the first thing. All right, change in trend to take us to where? Well, this becomes slightly complicated, but I'll uncomplicate it for you. The very first thing, John, that you can do is you can draw some of these diagonal trend lines out there. The trend line out here that comes off of the low from back on March the 16th, out here, you can draw that trend line. You can run that right into the low from August the 12th, just a few days ago, about a week ago. And as we take a look at that, if price were to close below that, then you've got some other trend lines out here to pay attention to. So you can put those in on your system to see where gold is likely targeting. That's what it's doing on the daily time frame. Change in trend. We talked about this yesterday. The real change in trend that you're after, that I'm after, that everybody's after, is not this couple of day move or what have you, but it is the more intermediate term time frame change in trend. And that's what we're watching for. And the way that we would get that information, John, watch tomorrow, gold's close. 1933. So that number hasn't changed on the weekly time frame chart. This is Stevie's weekly chart for gold. That is the oscillator and change line. Now, look, if we get a close below that come tomorrow, come Friday out here, it would only be 1 week below that level. And I do have this 2-week requirement to confirm that signal. But it would be communicating to us, John. It would be hinting, like Paul Revere riding through the screens of TFNN. You know what he'd be yelling? I was just going to give you a Joe Biden there. Like I can't come up with something. Well, it'd be yelling, be careful about the change in trend. You just closed below Stevie's green line. Isn't that what you would yell if you were riding through the streets of the TFNN screens out there? Of course you would. That's what you'd have. So 1933 is really what you're going to have to watch out there, John. And if we see a close below that, well, that then signals to you and I that gold would pull back to 1730.70. That'd be the first target on its weekly time frame chart. But before we get there, there's going to be a lot of ups and downs. It's going to move to the upside and to the downside. So as an example, out here this morning, what do we know? Well, this morning, price was moving lower, doing less relative energy, generates a TD9 count bottom, generates a Rhodes momentum indicator bottom. And then what does price do? Price runs right up on a 30-minute basis, right up into resistance, 1958.10. And isn't really boding well for gold out here. We've seen 2 rallies that have stopped at about the same point out here, John. It is not looking good. Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go back to that 30-minute chart here for gold. Let's go ahead and finish this off. We're doing this for John in Sarasota. And so, John, the numbers here to be watching today. So gold is trading in between support and resistance from a 30-minute time frame. The resistance, 1958.10. It's not a figure Stevie just, pulled out of his arse or anything like that. That's the TD9 breakdown level. And then the breakout level would be 1936.40. So price is trading in between those two. If price were to close above 1958, then gold would rally up or should rally up to about 2015. That's the next breakdown level. If gold closes below 1936, then we should see gold take a run for Stevie's green line on that weekly time frame. But really, to make it very easy for you, John, you just want to pay attention to the weekly time frame, because then if gold busts through that, closes below that 1933 level, then it's going to make decisions a whole lot easier, and it should result in a market that pulls back for a couple of months out there. We already have that one downside target. You asked about the GDX. Well, if gold is going to pull back, the GDX logically should pull back as well. If we take a look at the GDX, this has wave number 7, that's letter G, and a Rhodes momentum indicator top. Those were both confirmed, or the Rhodes momentum indicator top was confirmed on August 7th when price gapped to the downside out here. Now, what the GDX has not done, or where its next target is 38.34. That is support, the TD9 breakout support. Two closes below that, John, then you're looking at 32.69. Two closes below that, you're looking at 24.37. Resistance right now is Stevie's oscillator unchanged line, and that's at 42.77. That's approximately where price stopped yesterday. It closed just slightly above it, but we're just talking about a smidgen, and smidgens don't count in this game that we use. These lines and these numbers as we give it a little bit of wiggle room out here. So the GDX should follow suit and likely pull back to 32.69 to 24.37 over time. There would be an A to B equals CD pattern that would also start or may have already begun to form. That A to B equals CD pattern, I can't draw it in on this chart. My apology for that. I could draw it in on the other chart, but we don't really need to do that. We're just really trying to answer your question. On a weekly time frame out here, the weekly time frame, what does this show for us? So it's I don't see the A to B equals CD pattern here. What I'd be watching on the GDX, much like on the weekly chart for gold, John, is 40.30. If you see a close below 40.30, certainly two of them, that's going to suggest a pullback to the 32.77 level, maybe even 20.28 out there would be the number. So gold's going to, so the overview of gold on the daily time frame, John, it's pretty simple. Don't mean to sound like a broken record. It has given us a change in trend signal. Now, because price is so close to the weekly level of support of 1933, you wait to see if price closes below that before you take any kind of action out there. So I hope that, and the reason is you're so close to that level of support, no matter what the charts might be communicating to us now, I would never have you get into a short position when price is near support. You know what I mean? I think you do. So thanks for writing in, and have a great day. Mike L in I think this is Mike in Niagara Falls, if I'm not mistaken. What area of resistance needs to fail in the Dow or the Dow futures to negate the retest of the market lows? No. What resistance needs to fail? No, there's. Well, I don't. I don't know how to answer that question for you, because that is not the camp that I'm in. I know these markets are moving higher, and each one is different. I guess I go back to this, if I can find it here real quickly, because I don't want to take too much time. But the premise of your question, Mike, is just something that I disagree with. So that doesn't mean I'm right. Well, here you can see the tops that are in place out here for different instruments. So far for the Dow, it's February 10th. So if you're going to ask me what does price need to close above, it'd have to be that high from February 10th out there in the 29,000 area. If we take a look at the S&P 500, it just simply has gotten back, as you know, to its highs out here from February of 2018. We still don't have the high, so to speak, inside the NDX 100. The Russell 2000 was August 27th. This is the weekly chart we're looking at. So the week that began August 27, 2018. If you take a look at the New York Stock Exchange, it was January 13th. of 2020 out here. So, you got the Russell 2000. It does have like 2,000 plus stocks inside of it. New York Stock Exchange, 3,700 instruments out there versus 30 instruments in the Dow or 100 instruments in the NASDAQ 100. And how many instruments in the semis? 30 or so out there too, 30, 35, something like that. So the bigger picture out here, Mike, is that we're seeing what we're seeing inside the technology sector and some of these others because of this dynamic shift that we have seen that has taken place and we have to adapt to. And it's not like it's going to go away. It's not like a vaccine is going to solve this issue out there. And vaccines, don't get me going on vaccines that basically only help 50% of the people. It's usually not that 50% of the people that are the sickest out there. But what do I know? Apparently not too much. In any event, Mike, so that's the best I can answer your question for you. I don't see it the way that you framed your question out here. But with regard to the Dow Equity Futures contract, here's what I can share with you. And that is, if you do see it close below the bottom of its daily profile, that's 26,946 out there, then that's going to suggest a change in trend. So that question would be, okay, I'll go along with you, Stevie. It's going to be a change in trend to take you to where? Okay, so that question is something that I can easily answer out here. And as we take a look at it, that would be the TD9 breakout level. So remember, we're watching in the futures, 26,946. The next level below that is 26,197. Then below that is 24,266. And we just simply trade by the numbers, and the numbers have also been able to identify support and resistance out there. So that's what I see going on inside of the general marketplace, so to speak. Let's go to the next question. HD says, hey, I'm interested in getting into a long position inside of Intel. So let's go take a look at Intel. And let's look at we'll start by really just looking at the daily time frame. In fact, it's probably the only thing that we need to look at. But let me do this here. Let me put up our 3 time frames, daily, weekly, and monthly. Take a look at where Intel is trading in relationship to profile. So there is a new bullish structured daily profile. And if price closes about 49.92, not 49.93, let's just say $51. If price closes about $51, good chance you would see Intel make a run for the 52.88. Now, that doesn't mean that it's bottomed, HD. It just means that it's because it's a bullish structured profile that when you do close above the center of that box, odds favor buyers should be able to push price up to resistance. So 52.88 is a number. That's supported by the fact that Intel is trading with inside its weekly profiles, but the ideal buy area here would be 46.08. I don't know if you'll get that, but 46.08 would be the number. On the monthly time frame, price is trading with inside its profiles, and ideally, your real buy on this long term would be 43.60 out there. Now, as Stevie pulls over his other charts, his white background charts, I can make that case. We can make a case that this formed a Gartley buy pattern. Steve Rhodes with TFNN, and we'll finish off Intel as soon as we get back from this break.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we're taking a look at Intel out here, and HD wants to go long. And we were looking at this chart here that shows the Gartley buy pattern. And in the Gartley buy pattern was confirmed. It was an A to B equals CD to the downside. It was confirmed really a couple different times. You had a hammer candle, the bull sash candle out here. Today you've got a rising window. So all those are bullish indications, HD, that it is trying to form a bottom. The problem that you've got is that price has been unable to get above something that should be easily able to do, and that's the 49.92 level out here. So that combined with the following would have me be very cautious about getting into Intel. So what would be those things? Give me a second here. I'm going to show you those things to consider. The first is going to be what is the sector doing? So you got to remember, folks, in 2006, I had tons of investments in the stock markets. At that time, it was all stocks, individual stocks. And every weekend, I would sit down. What I would do with my weekend after golf would be sit down and take a look at each instrument. And each instrument, I had these huge spreadsheets. Typically, I would have about 80 to 100 different individual positions in my portfolios out there. And but I didn't know technically what was going on. It was all based upon fundamentals. Look, I'm a CPA. I can cut, paste, and assemble with the best of them out there. And so one of the things that was taught to me early, and it was taught to me by my favorite polar bear, your favorite polar bear as well, was if I'm trying to get an individual stock right, and David he can chime in and tell you. I can almost picture where I was when David was sharing this with me, and that was get the index correct first. Get the index, then the sector, if there is such a sector, and then the stock. Make sure they're all, in essence, pointing in the same way. Now, look, you're not going to get every stock typically inside a sector and index. It's trading in the exact same direction out there. But generally speaking, you can get the majority, or you can certainly see what makes up the majority of the index. So that being said, what I would say is, what's the semiconductor index doing, HD? Because you don't want to fight against that. And here, if we take a look at it, the semiconductor index generated a Rhodes momentum indicator top 2 days ago, and it did that with a bearish engulfing candle. Today, what we have is we also have another bearish candle. don't worry. The mere fact that the body of the candle is green or red doesn't make it bearish or bullish. That just tells you where price opened and where price closed. And the wicks tell you what the emotional extremes were in that session out here. So we actually gap, not we, but the semiconductor. So you've got your second bearish message inside the indice out here. And I know if Polar was sitting on my shoulder, he'd be tapping to me and he'd be saying, the index is saying, don't do it out there. In other words, you'd have to be fighting upstream. And the index signal, the semiconductors are suggesting that they want to pull back to test its breakout level in that 1953 area. So it would be for that reason, that would be for that one reason that would have me being very cautious out here. Now, Mike in Niagara Falls asked a great question out there. Hey, Steve-O, what do the markets need to do in order to get you off of looking for a market top? Well, I'll tell you one thing that they need to do. They need to shake this. Because you and I know, each of us know that these markets pretty much work in tandem. And when they top, they typically top around the same time and bottom around the same time. Yeah, there's some interval changes or differences out here. But when you take a look at this is taking a look at everything going on around the world. Now, what show do you tune into where somebody shows you exactly what's going on around the globe out here? Now, look, I don't have the descriptions out here. I'll add the descriptions so you can see. And I don't know where that went. They used to be there, but this is covering every major and even minor worldwide indice. And you can see all of these topping patterns out here. You've got the Rhodes momentum indicator signals, tops either confirmed or signals out here. You've got TD9 counts if you see stars and nines or letter G's in the Chapman wave count. So it is this reason here that has us looking for a market top. The U.S. is being stubborn. Now, the only thing that would say, hey, you know what, even though the rest of the world is saying not so fast, but the U.S. is going to ignore that, is if we saw the global flow of capital coming into the United States. And we don't see that. I don't see that. This is, well, here's a version of what we just looked at, but in chart formation. So you can see the different ETFs, and you can see which ones are in descending trends and which ones have formed highs long ago out there. So no breakout. I can't find my other, well, let's see what else can I find that I have that I don't have to restart out here with regard to global capital flows. And I think, what's this one here? So this one is 46 months. So this is from the time that Trump was won office out there. So if we want to understand how the market has responded during the Trump administration, it's really right here. If you want to understand what global capital thinks of the Trump administration, it is now right in front of your eyes. In fact, I probably the answer, if I were to ask you this question, you can answer it now. Tell me the two best performing areas since November of 2016 across the globe. Tell me what you think are those two most successful areas since November of 2016. You're not going to believe it when I tell you. No, G7, it is not bonds. It is not even close to bonds. It is the U.S. market and China. Here, now, for the U.S. market, because global capital, large capital, they like the trophy horse, and the trophy horse is the Dow for them, and it's the reason that we take a look at it. And the rate of change in the Dow in U.S. dollars is up 53%. In yen, it's 54%. In euros, it's 42%. In pounds, it's 42%. That is the rate of change since the election. The second area is China. MCHI, if you want to take a look at that, is the ETF to be able to track what China is doing. 55% in U.S. dollars, 44% rate of change in terms of euros. Nothing else is even close. United Kingdom is down 11%. Canada is up 12% in that same time period. India, 14%. The U.S. dollar is down 6%. Do I have the bonds on here? You know what? I don't have bonds on here for some reason. Sorry about that, G7. But I know it's not bonds in that time period. Germany up 14%, Japan 14%, emerging markets 18%, Brazil down 21%, Hong Kong up 2%, Mexico 33% to the downside. So if you're wondering, see, you're going to hear all kinds of crap. And it is just absolute BS. Before Steve shared this chart with you, if you're wondering how the market behaves to this guy, and right, the big fights between the U.S. and China, yet U.S. and China are the two big winner chicken dinners out of here. But the point of all of this, and really to show you this, is this shows you that there's been a concentration of capital in those two marketplaces since November of 2016 out there. And I scan the global flow of capital each and every day, looking for some type of clue that capital is shifting from one place to the next. And right now, what I can share with you, we took a look at that chart with all those topping patterns around the globe. I don't see global cap. I think global capital is confused as can be, and it is not sure where to park itself. And it has not parked itself in Goldilocks, folks. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Bill H. writes in. He says, hey, Steve, could you analyze the VIX out here? So let's go take a look at it. happy to do that with regard to whatever I can share with you. So as we take a look at the spot volatility index, trade down to 2304, really in line with everything that we're taking a look at in its futures contract. It's really set up from a bullish standpoint by the mere fact it's trading below its 50-day exponential moving average. That is 2635. So just generally speaking, Bill, out here, this chart here lets you know that if you were just beginning your technical analysis and you were just looking for one simple thing, one simple tool, one simple indicator to tell you whether to be long or short the S&P 500, you can use the spot volatility index. These yellow squares, boxes, rectangles tell you when the spot volatility index, that's above, tells you when the spot volatility index is generally speaking above the 50-day exponential moving average. And in the green, when it's below the 50-day exponential moving average. There may be a day or two where it goes up or down above it. We're looking for consistency and momentum here. So a very cool tool out there. What else can we share with you about the spot volatility index? Well, it did form a bottom out here. And when I say a bottom, I'll pull this up, and it did form a bottom with a TD9 count. It was the bar after bar number 9. So the TD9 counts work on everything. We could see that when the VIX actually topped back on March 19th, it was bar number 9. There was a Rhodes momentum indicator pattern as well out there. But it had that. And so the low from the trading session of August 12th, Bill, has not been taken out. It's a valid bottom. And so the VIX may just simply be targeting that 50-day exponential moving average line. 2636 and if price can get above that, 2829. I would say if the spot volatility index, Bill, closed above 2829, that's a TD9 breakout level. Well, one would be above the 50-day exponential moving average. This show is over. Son of a gun. Boy, it flew by quickly. That and price closing below the bottom of that new daily profile, then things would get rocking and rolling to the downside. That number again, 3342. Folks, my apology. I lost track of time. But we'll get to those other questions that came in tomorrow from Hector and Marty and Bill. Have a terrific Thursday, folks. Stay tuned for David White, your favorite polar bear, and I'll see you tomorrow.